Hey guys, I'm Steve, and welcome back to the channel where we talk about the joys of stock market investing and long-term dividend gain. If it's your first time stopping by the channel, do me a favor, hit that subscribe button. Don't cost nothing. You'll get something out of it. Trust me, you won't regret it. And if you're a returning subscriber, welcome back. Well guys, 2023 is almost upon us in less than 60 days. And 2023, guys, is going to be one of the biggest buying opportunities in recent times. You know, we're going to have a lot of value. We're going to have a lot of earnings calls that are going to go awry. We're going to have a lot of good stocks, good companies, blue chip companies, a lot of growth stocks that are going to be dropping and falling into our lap. You're seeing that now with the earnings this week and last week. You know, so today I want to talk a little bit about what we as investors can be doing to get ourselves ready, you know, to make sound investments going into 2023 and beyond, until this thing gets back over, and we'll be sitting pretty when we run into the bull market. Because right now we're in the bear market, and right now we could be getting our game plans together and the like, protecting ourselves because we're going through the recession and all that inflation. Until this storm is over with, we want to tread water, you know. So let's get into it. First and foremost, I seen the quote where it says millionaires are made in recessions, and that couldn't be nothing more than from the truth. You know, it's true. Let's look at it. 4 things happen in a recession. You have unemployment, you have a drop in wages, you have negative consumer sentiment, the confidence, you know what I mean? And we have a decline in value. And when I say value, lower earnings reports, stock market, everything starts to go down. And as we all know, a falling market benefits you as an investor. You know why? Because all of your favorite companies that are already valued too high, or, you know, companies that you've always wanted to own, and they ran through the bull rally and their numbers have went all the way up, they're all starting to come down now. So the opportunities are there for you to jump in, get your stake, and then be a part of the bull run and get those gains. Now, like I said, we'll go one at a time. Unemployment. The jobs report came out today, right? And I don't have the exact numbers, but I know it wasn't favorable. Unemployment did not go up the way they thought it was going to go. The numbers wasn't where they thought. In fact, I think it went backwards. You know, unemployment went down instead of going up. And the first thing the Feds do when they raise the interest rates, first thing you'll start to see is a rise in unemployment. Yeah, now, you know, companies are laying people off and stuff, you know, but it's not at that rate that the Fed needs it to be at, to where we can drop down from this 8.2 or 8.1. I don't even know where that. I know we're in the 8s, and we got to get all the way down to the 2%. So that tells you right there we got a long way to go, and it gives us enough time, excuse me, as investors, to get our portfolios in order and get our plans together of what we want to do and be part of this rally when the rally does take off. Now, I think a couple of things that I think are interested, right? Excuse me. Stock market right now, the major indexes are down between 20 and 25% respectively, right? Some analysis say, and this is the thing that's key, some analysis say that we got another 30 to 60% to go from present. So I'm like, man, if that's the case, man, I'm dying to see what these stocks, some of these stock numbers are going to be. Like Amazon and Google right now, guys, I'm telling you, I am so tempted to buy some of those stocks because they're so low right now. Especially Amazon. Amazon just hit another 52-week low. You know, and then that's another thing you're going to see. And this is one of the things about being a long-term dividend investor like myself. You'll see deals, but you know from your knowledge that this is only the tip of the iceberg, and you're going to want to jump in there and buy. But you know, if you just have patience and you wait a little bit longer, things that are overvalued will come down and get right to their normal value. It just takes a while. You know, I don't want to say a while, it just takes patience. Because, I mean, think about it. The average bear market, right, usually lasts, you know, between around 15 months. That's the average amount of time for a bear market. We're in a bear market now, right? And the average drop is between 34 and 35%. you know, as far as the market falls in the midst of that 15-month period. So I mean, we got a lot of time to go down, but this particular crash they saying is supposed to be special, you know. And like I said, a falling market benefits who? You and I, the investor. All we got to do is just pay attention, watch our watch list, and just use patience. Don't just grab a stock because you see it down. If it's not a stock or a company you believe in, don't even mess with it. Don't buy something just because it's cheap. You know, make sure you invest in the things that you want to invest in. Guys, dropping wages, right? Things are going to start going down. They're going to start the unemployment. They're going to start with the unemployment. You start dropping things down. Stuff is expensive right now. Food, all of that. So they trying to make it to where they're tightening the belts on these corporations and companies to where they got to let people go because they have to they have to limit their risk too, because all businesses are in making money. So you got high food costs, prices. I think gas is about to go back up. You know, crude oil went up today, so I don't know. I think gas is going to probably go back up. It's past $92 a barrel. It's one of the things. All in this time, the Fed, like I said, is going to be hawkish. They said there's going to be a lot of pain in society, a lot of lost jobs. Stuff is expensive. They're trying to get everything down. High interest rates. Anybody going to be buying cars like that? The home market is already affected by it, right? So we're going to have a lot of consumer confidence that's going to be disrupted, you know, because a lot of people ain't going to be able to travel. A lot of people ain't going to be able to go buy cars like that. They're going to try to stop people from spending. So they're going to put the squeeze on the economy where everybody like, man, everything is expensive. Well, I can't afford that. Let me just fall back for a little bit. And this is normal, guys. It's normal. But all of this, you as an investor, realize it's normal and it plays into your advantage because all of our favorite companies are going to get what? Discounted. Why? They're going to have lower earnings, you know, because part of them raising rates is to have everybody control spending, not just us, the consumer, but these big businesses, you know, so they got to keep making a profit. Why? Because they have investors too, you know, and these are people that are investing in them. Like they have us, especially if they pay a dividend, and they don't want people selling the stock. So they have to keep up with what they have to keep up with too. But guys, I'm telling you, you and I, as investors, coming up to 2023, and it's another thing, we got to get to 2023. Will we have a false rally? Will we have a Santa Claus rally? Nobody knows. I think we will, because it's just the holidays. But, you know, who knows? I mean, ever since I've been investing the past almost 8 years, after November and December, stocks usually take off. You know, they usually do good, especially in December. If you have an earnings call in December, and especially retail, that's like the big earnings thing for retail. The earnings month for retail, companies like Target, Nike, Walmart, they always take off and do well in December, you know, if you really pay attention to it. So we'll see how that goes. But what can we be doing leading up to 2023 and in 2023? I mean, I don't think it's a rush, but I'm not telling you to just sit on your hands neither. Only you know when it's the time to strike or what price you want to buy into where it feels valuable for you. You know, so don't let me dissuade anybody from buying stocks. I mean, I'm just some guy on YouTube anyway. But I mean, first thing you do, you know, and this is just real world stuff that can help us just, you know, in our investment opportunities, you know, moving into 2023. The first thing we can do is to control our spending. Only buy things that are necessary. You know, don't accrue any unnecessary costs and things like that. I mean, it's just common sense. Don't go buy something that, you know, like the way I look at it like this. When I go and buy something, to tell me if it's necessary or not, you know, I'm like, okay, a year from now, I'll still use this product. And I did this a long time ago. You know, I learned this a long time ago, and it helped me in my financial journey with saving money. I don't want to buy something just because I want it or I've always wanted it. You know, there are people out there like, oh, why'd you buy that, man? Oh, man, I've always wanted it. And then you get it, and then you realize it's not what it's cracked up to be. And now that you got it, after a week, you're like, it sits on the shelf. You know, you don't want to be like that. So I look at it like this. If I'm buying something, if it's something I can use a year from now, or it's something that makes my life better right now, that I would use constantly, no, unless it's food, clothing, and shelter, you know, I can do without it. And it's just something that you learn with age. Another thing is have reserve cash. You know, now in a recession where everything's going to be expensive, everybody telling you, hey, save your money, save your money, save your money. To an extent, that is true. You know, you want to have cash on hand. But as far as like investors and stuff, have a cash reserve. And what I mean by cash reserve is put a little bit of money. You know, you put money in the bank, put a little bit of money in your investment account. You don't have to buy stocks right away, but just ration out, okay, I'll make this amount of money. Instead of me putting 10% of my money in here, I can put 10% of my money in that account. The money's just sitting there. You ain't invested in stocks yet. It's still sitting there. You know, an investment account is still an account. So whether it's in your bank or in that account, it's the same thing, right? So put money to the side, because you don't want these some of these stocks that you have in your watch list to fall down to a number that you think you want to buy into. It's nothing worse than saying, man, I shouldn't have bought that TV. I shouldn't have did this because, man, I could have got these stocks. You don't want to be that person. And, you know, when these values come, you want to be right there to grab them. You know, and they will come. Trust me, they will come. Another thing, and this is a big thing, you got to protect your job, guys. They're laying people off left and right. You don't know what the squeeze is going to be on the company that you work for and all of that. You got to remember, employees are an asset. But a lot of employees don't pull their weight. So in a way, they're only assets because they're in need. Only the strongest survive at the end. So make sure you're an asset at your job. You come to work. You're not calling out. They don't have to say nothing to you when you're out there doing your job. Your performance is exceptional. I'm not going out telling you to go out there and break your back and work hard, but make it to where it's hard for them to get rid of you. And that's a big thing. Just like you want these companies to work hard for you with these dividends and stuff, work hard for the company. And when I say work hard, I'm not saying go in there and break your back and, you know, work all crazy and stuff. Just be smart. You know, make it to where it's like, okay, I work here. If it's 5 of us lined up, I want to be the last one they let go. And that's just how it is. You know, and that should be like that at all times. You know, you are your biggest investment. You are your first investment. You can't invest in none of these stocks or anything like that until you first invest in yourself. How do you invest in yourself? Especially when it comes to the stock market, educate yourself. Get you a couple of books. They got good YouTube videos out there. Look at some of the greats, Warren Buffett, Ray Dalio. They have all kinds of documentaries and everything on YouTube. Or get on the internet, read about these people, what made them good investors. That's what I did, you know. It all comes down to how hungry you are. Don't just jump into this because you see people jumping into it and say, oh yeah, I got shares of this and that. Know what you're doing. Know why you're doing it. You know, and always invest long term. Don't buy a stock saying, oh, I'll buy it now. And then in 3 or 4 months, the stock will grow and I'll double my money and then I'll sell out of it. And that's a problem that a lot of new investors have, or a lot of people that just really don't know how to invest. You know, that's one of them things. Me, I buy a stock with the intention of holding it 3, 5, 7, 10 years. Now, some stocks I have, hopefully I will never have to sell. You know, and I try to watch my finances to make sure I'm never put in a position where I got to up and sell something that I've held for 5 or 6, 7 years, and all of a sudden I got to part with it because I didn't do my due diligence in picking something up, or I got to make a payment because I wasn't disciplined financially where, you know, where I'm presently at. That puts me in that present position. So, but I mean, things do happen. I'm not judging anybody. Another thing is, and this is a big thing too, and this is probably the final thing I'm going to talk about. You've got to diversify your investments. And when I say diversify your investments, you don't want to put all your eggs in one basket. What I mean by that is this: if you're investing in the stock market, we talking about just the stock market, you don't want to have all one sector, or you don't want to have a majority two sectors or something like that. You want to spread out your investment opportunities and spread it out through multiple sectors, thus spreading your risk, reducing your risk. Because some days or some parts of the year, some sectors do worse than others, and it's impossible to tell which one is which. So, you want to have one hedge against the other, and you want to have it to where your pie graph of your portfolio is diversified, in a good percentage in a lot of different areas. Now, am I telling you to go buy stocks in consumer staples just because you don't have nothing in consumer staples? No, I'm not telling you that. I'm just telling you to be smart. Be smart, know what you're investing into, and diversify. That's it. But guys, man, I just wanted to chime in a little bit. As usual, it's Friday. I'm excited about 2023, and I got my own strategy. And leave me a comment, man. I'm anxious to see about you. What kind of strategy you got? What are you looking at? What sectors are you looking at? What's your plans? We don't have to include dollar amounts or anything like that. But I mean, how you feel about 2023? You think it's going to be it's going to be the first start of the biggest wealth transfer in recent history? Or are you not buying it? Because I think 2025 is when this thing will finally turn over or capitulate, like everybody says, where it runs green and we go back in that bull market. But I wouldn't dilly-dally with it. You know what I mean? Educate yourself, grab a couple of books, keep an eye on the market, and when something comes to where it's within range, you strike it with that hammer and you put it in your portfolio and you keep building. But as always, man, like I said, it's Friday. I hope everybody has a wonderful weekend. I'll upload tomorrow. But as always, man, leave me a comment, subscribe. When this thing is over in the end, we'll all sit back and talk about it. You know what I mean? And I want you to be right there with me. So I'll see you guys in the next video. Thank you.